What's up, everyone? It's Karthik with MoneyVest, and here we go. It is about to be one crazy start to the day with Tesla up over 12, almost 14% right now, trading up to over $283. At one point, it was almost as much as $290, a price that we haven't seen in over 1.5 years. Since July 2023, we haven't seen Tesla trade at these levels. A huge gap up and a breakdown above 270, a level of resistance that was holding us down for over 1.5 years. Nasdaq here is up over 1.6%, and the S&P 500 is up 2% on the day so far. Pre-market, we've got Nvidia pushing up over 1% right now. IWM is up over 5.6%. So almost 6% higher, with Pltr also continuing on that gain, is up another 4.5%, getting up to over $53 per share. And Sofi, also pre-market, is up over 6.5%. So brace yourselves. It is going to be a tsunami of greenery at this market open. I want to see a lot of rocket emojis today in the chat. This is going to probably be one of the biggest days of 2024. And in terms of market cap, we're going to be seeing over $1 trillion easily close to $1 trillion being added into the market here. We're going to see the MoneyVest Index update as soon as the markets open. We'll take a look at how far into the greed we are in this market cycle as we continue to see this upshot on the back of the official election results, as this right here is what it looks like. From a president standpoint, of course, Donald Trump crossing over 277 electoral college votes, winning in Pennsylvania, winning in Wisconsin. There's still a few more states that have done 97% reporting, but it's pretty much a done deal. I think the estimated number was 315 is how much he's going to end up with. So again, it's official. He's won. And I think there's also a huge probability for a complete Republican sweep, as Senate is already won by Republicans. The House is still up for grabs, but of course we got 198 versus 180 for the Democrats, and of course we got the governor already appointed from Republicans as well. So we're looking at a complete sweep here, and S&P 500 could hit 7,000 next year under a Republican sweep. A few investors are also predicting. So a lot of momentum coming in. Volatility with a huge gap down here, down over 22%. So trading it now down to 15.8. So a significant drawdown here in volatility after the elections. A huge gap down. Bitcoin at all-time highs at just under $74,000. So up over 6.6%. And yes, Russell 2000. We've got small caps. So IWM is pushing up over 5.5%. And yes, we do have few parts of the market that are selling off, which of course is stocks like Enphase Energy. So it is down a little bit over 13% right now. If you take a look at TAN, which is your solar ETF, it is down a little bit over 11%. So that right there, of course, is, we knew that if Trump comes into the office, it's not going to be super great news for solar and renewable energy stocks. And as a result, they are selling off. And take a look at the 10-year treasuries, 4.4%. So huge rally here, coming up to the upper range of this lower high. And so a massive jump in the 10-year treasuries. So folks, do me a favor, drop a like and subscribe and share this live stream with a lot of people. Let's just blow this party up, because it is going to get absolutely crazy with this market momentum. As soon as the market opens here in just over an hour, we're going to see a lot of inflows, a lot of capital getting deployed, because this was the biggest uncertainty holding investors back from investing. And we also learned about the record high numbers when it comes to money market funds and the assets sitting well over $6 trillion. And I think a lot of this is going to get deployed into the market, as Tom Lee from Fundstrat has also talked about it, that this post-election rally is going to, in his opinion, be very strong, because that uncertainty is now out of the picture. Now, we do, of course, have the Federal Reserve meeting coming up on Thursday, so that's going to be tomorrow on my birthday, so I'll be live, of course, to cover that as well. But if you combine this significant certainty of finally having the election results in a clean sweep, combined with the Federal Reserve rate cuts, you've got yourself a very bullish market, right? You've got yourself a market which is going to just disregard everything else, and it's going to be straight up very, very strong to the upside, right? That's exactly what we're seeing with volatility absolutely getting crushed here. And so, look, ideally, would have preferred some buying opportunities before we got this big burst of momentum to the upside. But nonetheless, I think today is one of those days where you just do nothing, sit back and enjoy. Because these types of days when the markets are up 2% in one day are not very often, right? We don't see these 2% positive days every single day. Like, in most cases, the average daily gain is about 30, 40, 50 basis points. But other than that, having a 1.5%, 2%, 3% day is quite unusual. So, if you come take a look at the MoneyVest index, this is going to get updated very soon, but our focus is going to be on the market concentration. And yesterday we had over a $630 billion gain in the S&P 500, and that was over a 1.2% gain. Now imagine if the S&P is up 2% today, that's clearly going to be close to $1 trillion worth of gains for the day today. So there's going to be a lot of inflows, a lot of capital getting deployed into the markets here. And again, majority of that going into Tesla. Tesla is going to be the big leader, at least for now. We'll see what happens once the market opens and if that changes. But Tesla here up over 12.5%. I think today might be the day it crosses over $1 trillion. Let me see. If I do some math here, $807 billion times 1.125. So it is going to be trading at just about $908 billion. So we are still going to be 92 billion short of Tesla becoming $1 trillion company again. So if you do the math here, what it needs to, like how far up it needs to be in order for Tesla to be $1 trillion. It's at 1 trillion now. So I mean, 807 billion is where it's at, and 12.5% gain is going to put us at just over $900 billion. So that's going to be about $100 billion gain for Tesla today. But if you do the math, 807 times, let's say 1.2, then we're at 968. 807 times 1.25, we're looking at just over $1 trillion. So it would need to go up at least 25% in order for Tesla to be a $1 trillion company again. And $1 trillion for Tesla, which is a 25% gain from yesterday's close, means that it would need to be trading at roughly around $314. So $314, call it $315, is where Tesla would need to be in order for it to be trading at an all-time high. Now, pre-market, we were as much as $290. I think $290 was a pre-market high. So we'll see, whether it breaks out above 300 on the day or not. So we should start a new poll. Because right now I've just got a silly poll here, markets today to the moon or to the Mars. But I'm going to end this poll and I'm going to ask you guys a new question. Tesla today and whether it's going to break out above 300 or not. So break out 300 or rejected at 300. So that's the big question because Tesla hasn't really traded above $300 in well over 2 years, since September of 22. I mean, the level that we're seeing right now is the high from back in July of 23. We got up to a high of $299.29. So $299.29, that's just shy of $300. That's a level that we saw from back in July 23. It's been well over a year and a half. And if it breaks out above 300, that's going to be a level, that we haven't seen since September 22. So that's going to be a pretty crazy breakout for Tesla. And Milan says Elon Musk is a genius. Yeah, I mean, he's sure got his place in the office in some way or another. Of course, after endorsing Trump in such a vocal sort of way on Twitter, on X, and so it was kind of speculated that it's going to be a little bit more tightly contested, but I think, if anything, this was not tightly contested at all. This was a very, very clean sweep victory across the board. Now, the real reason, I think, really is that we're kind of removing that uncertainty around from the market, right? That's one of the biggest reasons why we're seeing such a massive rally in stocks here. Now, if you were to look at, how Trump has done versus other presidents, it is really just any other news, because if you take a look at the stock market performance, you'll notice that most all presidents have seen the market surge during their reign, with the exception of Nixon, there's been, and Bush, there's been almost all presidents that have seen the markets go up very, very well, right? So you've got Reagan, you've got Carter, you've got Ford, you've got Johnson, Kennedy, you've got Clinton, HW Bush, we got Obama, of course, 181%, probably the best gain that we've seen over an 8-year period. We got Trump, 67%, and we got Biden at 36% so far. And this is as of May of 24. I'm sure since May, of course, the markets have gone up even more. So I think that number might be closer to 40, 45%. Still a little bit less than Trump, than what we saw. But this also happened on the back of course, as we already know, significant amount of deficits increased by Donald Trump, right? So I think that's one of the biggest concerns that a lot of economists also have is, there's a potential for a lot of money printing and a lot of issuance of debt, as opposed to if you have, let's say, for example, Barack Obama, 8 years presidency, the debt essentially grew by 8.3 trillion over 8 years. That's about $1 trillion per year. That's how much the debt essentially grew by. And that same number was accomplished by Donald Trump in just half the time, in just 4 years, right? So that's $2 trillion per year versus Joe Biden, that was 4.7. So a little bit over $1 trillion per year. So that was on par with what Obama did during his 8 years versus, of course, Donald Trump, which is twice as much in half the time. So that is, again, one of the concerns. And, look, that has mostly been pretty good for the markets because a lot of money printing leads to a lot of money in circulation, leads to lower cost of borrowing, leads to just a lot of investing and saving and spending, and that's going to fuel the economy, fuel the growth. But what's going to be the end game, right? That's the real question here. What's going to be the value of a lot of this deficit spending, a lot of this issuance of bonds from an economical standpoint? What's going to be the real end result for all of this? But in the meantime, of course, stocks are just booming right now. We got Tesla up 12%. QQQs, S&P are just going crazy. I mean, S&P is up over 2.2%, and we got Nvidia pushing up over 1.2% as well. So I'm going to come over to some of the comments here. Folks, do me a favor, drop a like, subscribe, and share this live stream with everyone for other traders, investors, people to join us so that we can actually party up in this market momentum. DJT, which is Trump Media and Technology, up over 30%. It was much higher. It was up a little bit over 40% at one point during the election night. It has sold off a little bit. And, anybody who is sort of trading this or investing in this, I would certainly consider taking some profits off the table because you're not going to find a nice little pop here of 31-40%. And this entire rally since September has been leading up to this very day, which is the elections, right? And so right now, of course, we don't have a lot of revenues or profits to really base any fundamental reasoning as to why this might be a long-term hold. But in the short term, of course, we're seeing a very nice pop here, 30% on the back of this election result. So if you're asking yourself, whether it's time to take some profits, well, ask yourself if this is going to be a longer term hold for you. And if the answer is no, then a nice 30 to 40% pop here on the day is a pretty good level to consider. $55 is going to be that resistance that I'm watching for DJT. I know there's a lot of interest on this stock, and I'm personally not trading it, but from a technical level, that would be the level to keep in mind, and a support level that's going to be sitting right about here at roughly around $30. So that's going to be a support to keep in mind for DJT. Okay, coming over to some of the comments here. Kareem says, can you talk about a little bit about AMD? What are your thoughts? I was thinking about dollar cost averaging long term. So AMD is coming down to a very strong support. It's part of our shopping list with some nice buy targets that we also have. It is oversold right now. So if you are a long term on AMD, this is an area of support inside this green rectangle that I would personally be looking at a light buying opportunity. It's not a level where it's a heavy buy or it's an aggressive buying opportunity because the fair value is still lower than where it's trading at the moment. And so this is a nice little technical support with a nice area of demand. So a light buying opportunity for the long term is something that one can consider here at these levels. AMD did not participate last night, so it's only up 1.3%. I think most of semi stocks are not up a whole lot. The chip sector is still somewhat weak. It's only at 1.2%. I mean, even the NASDAQ is up more than that, right? VUG is up a little bit over 1.9, almost 2%. So this is a very clear indication that, okay, a lot of the momentum, S&P 500, for example, is up a little bit over 2%. A lot of that momentum is going, it's very broad-based, right? It is very, very broad-based. I think almost all sectors are green. If you take a look at XLF, financials, it's up over 5.6. If you take a look at XLU, which is utilities, right? That is one of these sectors which is down. It's very defensive. So A little bit more on the staple side. If you take a look at XLP, which is consumer staples, it is also up 17 basis points, but barely. And then if you take a look at XLK, of course, technology up over 1.6. Then we come over to XLC, which is comm services. It's up over 1.4. And let's see, financials, utilities. Let's take a look at materials, which is XLB. And that one is also up over 2.2%. So a little bit of a selling pressure in utilities, and staples is essentially flat. Very much risk on, but within risk on also, it is very broad based and not specifically concentrated in, let's say, Max 7 or semiconductors. There's a lot of other stocks, including financials, even industrials, I think might be higher, which is going to be XLI, up over 3.3%. So hitting a new all-time high, 140. So this is a broad based rally as opposed to just utilities having a little bit of a weaker sell-off here because of that rotation. Vault says that's why you stay in the market, stay invested, do not bet on down and up. And when the company is good, you stay invested and wait. Completely agree. I think, there's absolutely no point in timing the market. Time in the market will almost always beat timing the market. And one more really interesting statistic about this is the best days in the market come after the worst days in the market. The markets are the most violent all the way up when they have been the most violent on the way down. And that's why people who have the courage, who have the dry powder, who have the, who have the understanding of why it's so important to buy on these aggressive red days are the ones that end up making the most amount of money over the long term, is because their dollars go a lot farther than people who are simply just buying the top or on green days. Because, one of the things that we talk about on the channel so much is the idea of why these indexes, the MoneyVest index, why it's so important is because we're trying to capture the tail events. We're trying to capture the rarity in the market. And so when the buy signal triggers, we deploy capital without emotions kind of clouding our judgment. And that's been, that's worked out really well for us because it's a lot easier to buy on green days, right? If you could tell someone right now, today, markets are at an all-time high, is it worth buying? It's the easiest thing to do. But what's not easy is when everyone else is selling and you're the only one putting money into the market. You're the only one buying and you're the only one seeing the value of that sale, of that deal, of those discounts, of those cheaper stocks, and the price is coming down and the risk is coming down with it. And you sort of understand that, okay, I have to play that contrarian viewpoint where you have to deploy capital because stocks are coming down and they're giving us a good deal. So that is what ends up making all the difference. And so we're trying to capture those rarities, those discounts that come in every so often. And they're always going to be there. It's just a matter of how much and to what extent we're going to see them. Okay. It's going to be close to $1 trillion day for the S&P for sure. S&P goes up 2%, but when it goes down, it only goes down 1%. Not buying now means we're losing out on gains. Am I right? So, you're going to see the S&P, come down every so often. There's going to be some dips right here. You can see the 5.6% dip. Right here is a nice little 9% correction. Over here, you can see the 4.4% pullback. You can see the 3% dip over here. And of course, we're going to be pretty much opening up at a new all-time high at 5,900. I think we're just going to be shy of 6,000 today. So, the reason why not every single dip or a pullback or a correction is created equal is because of how much it's down, and also taking a look at market volatility and also market breadth. So, the amount of capital you deploy on a 3% pullback is not going to be the same as the amount of capital you deploy on a 9% correction or a 20% bear market. It's going to be very, very different. That's why we prefer to look at ranges as opposed to treating every single drop, every single sell-off equally. So the lower it gets down to, the more aggressive I need to be. That's how it's always been, right? That's why we've got these ranges on the MoneyVest index, that the lower it gets down to, the more aggressive I'm going to be. There's going to be a light buy, a heavy buy, and an absolute no-brainer buy where markets are trading down to these levels. So I'm really curious as to where the MoneyVest index is going to be today after the big pop on the day right now. So, my guess is we're going to be most likely above 4. Probably because of the significant drop in volatility and market breadth is just going to explode to the upside, where majority of stocks are going to be trading above their moving averages. We got a nice little bounce here on the percentage of stocks trading above their 20-day simple moving average, came down to 30%. So 70% of stocks were trading below their 20-day moving average. And when it comes to the 50 simple moving average, that number came down to about 47%. So more than half all these stocks in the S&P were trading below their 50 SMA, but the long-term moving average kind of held really strong and steady. It was still above 72%. So still majority of stocks were trading above their 200 simple moving average, which is a longer-term moving average. So long-term trend was intact. It was really the short to medium term trend which was breaking down, and that is what constitutes as a dip and a pullback. It was not an overall change in direction, because if you come take a look at S&P, I mean, we're still within the context of this uptrend, right? We're still in this higher high and higher low, and every so often you're going to find these dips, which are again putting us within the context of this uptrend. This is nothing but the uptrend that we're still seeing, but you're going to see some nice dips along the way. And until we see a nice little shift in the overall pattern where the S&P makes a lower high and a lower low, that's when it actually turns the direction to more of a downtrending channel of lower highs and lower lows. And that's when we need to be more cautious of catching falling knives here, because then it's no longer buying the dip, it is really just buying the lower low. So that's the whole difference there. But here we go. It's gonna be one crazy day. Brace yourself, everyone. I'm sure you're gonna be looking at your portfolio. It's gonna be one insane day, especially if you are a holder of Tesla. How many people here actually have Tesla? So I wanna hear from everyone. We got over 500 people watching, so make sure that you drop a like and subscribe, and also share this live stream with everyone. But I really want to see rocket emojis if you are holding on to Tesla, because Tesla is going to be breaking out to a 1.5 year high. I mean, Tesla investors have waited for far too long, and I've been doing a lot of videos talking about how it is more probable than ever before that we're going to see a breakout above 270. More probable than ever before. I've talked about this, that Tesla is going to see a breakout above 270. However, of course, there's this lack of catalyst between now and until the next delivery report, which is going to come out in the first week of January. And elections was probably going to be the only other catalyst for Tesla. So let's hear it. Let's see. Like, this has been a long time wait for most Tesla shareholders, and we have come through a lot of different cycles. We've come through a lot of different negativity and criticism and hate. Even on YouTube, I've read through a lot of comments, and it's been crazy, but we're finally breaking out to a 1.5 year high, and we're just a little bit away from hitting a 2-year high. And Tesla is going to open in at just over $900 billion, getting up to almost $1 trillion. You just need to get a 315, and we're at $1 trillion market cap again for Tesla. So, Jeremy, thank you so much for joining. Second largest position, Tesla at 173, Geoff says. So that's a great cost basis. It's my biggest position. Awesome. See a lot of rocket emojis. That's insane. Holding the bag on Enphase. Yeah, so Enphase has definitely been a tough one for a lot of people. And that's why I think it's really important to always hedge your positions as well. And again, Enphase coming down to pretty much down to that support at $73, $74 after the outcome from yesterday. Meg says, no Tesla, but got 2 Nvidia 117 call for 140 strikes at like $8 when it was at 138. So definitely feeling good about that. That's incredible as well. So yes, you're going to most likely have a fantastic day if Tesla, Sofi, Pltr, Nvidia make up majority of your portfolio. And of course, you got semiconductors, SMH or VUG, which are also pushing up really well. So you got VUG hitting a new all-time high at 397, and we got SMH also pushing up over 1.3% right now. So here we go. What's your game plan then? Are any buying or still waiting for Money Invest Index to go below 3? So Volt, it's days like today where you really got to just sit back and enjoy. So as I've mentioned before in my previous updates many times over, and I would highly recommend everyone to watch this video over here, because I think it's a 30-minute video going over the Money Invest distribution, why it's so important to capture those tail events, because at the end of the day, like, that's really what ends up making most of the decisions. Most of the bigger decisions are made when there is that rarity. And one more thing I pointed out is that the buying windows are shorter compared to when the markets are near all-time highs. So you'll notice that, of course, this is a buy signal, but over here, when on the left side of the distribution, it's not a sell signal, because as I've said before, markets over a longer time period have almost always went up, right? There's that big meme saying, stocks only go up, right? Because over the long term, you'll notice, obviously, markets have done very well, especially when you consider the more recent history of the last 20 to 30 years. So, and again, that is all, predicated on the very idea that earnings have done well. If earnings were not growing, If the companies over in the US were not dominating, this would not be the case. This would not be the outcome of the S&P 500. It would be very, very different. But because those 7, 8 companies and 10 companies have done so well, and I've talked about this in that video as well. And the reason I bring up this video so much is because it is really, really insightful. It goes over the tail events. And what's interesting is if you take a look at the Russell 3000's performance over the last 30 years, do you want to guess how many companies, what percentage of companies have made up for more than 50% of the gains in the Russell 3000? Let's take a guess. I'm going to ask this question to almost 600 people that are watching this live stream. I'm going to ask you guys, what percentage of the Russell 3000 companies have made up for more than 50% of the gains in that index? So that's the US Small Cap 3000 index. What percentage of these 3,000 companies have made up for more than 50% of the gains, contribution of these returns that we've seen? It's also at an all-time high, right? So you take a look at US Small Cap 3000 index at an all-time high at over 3,300. It's done really well. In the last 1 year, it's up over 32%. So incredibly well. But what percentage of companies have done most of the heavy lifting in this index? What percentage? Is it 100%? Is it 80%? Is it 2%? What percentage of companies have made up for most of those gains in terms of that contribution? So 100 Figure says 5%. Florian says 7%. Yeah, Wall Street Alex says today's the day you sit on your hands and do nothing. Emotions will drive the price action. Fully agree. I think it's one of those days where you just sit back and enjoy the markets here. 250 companies or 12%, 5%, wild guess. Okay, 5%, 3%. The answer is 7%. 7%. So imagine for a second, 7% of the companies have made up for more than 50% of the gains in the Russell 3000. Now, another really important statistic is 40% of the Russell 3000 companies have lost almost entirely of all of their value in the last 30 years. So the chances of failure are significantly more than chances of success. And yet the markets have done incredibly well. Why? Because it is just because of a select few that have done most of the heavy lifting. It's not to kind of disregard the other companies, but if you just look at math, you look at contribution, you look at statistics and some of those data points, it is very clear that Magnificent Seven has also contributed most of those gains for the S&P 500, and the market concentration also hit an all-time high for the top 10 at 37%. So 37% now for these 10 companies: Apple, Nvidia, Microsoft, Amazon, Meta, Google, Berkshire Hathaway, Broadcom, Tesla, and Eli Lilly make up for 37% of the entire index. And after today, I think it's going to be closer to like 37.5%, closer to 38%. So it's getting to pretty crazy levels, when you've got 37, 38, 40% of the entire index comprised in just 10 stocks, and 10 stocks out of 500, that's 2%. 2%. So it's absolutely crazy. Absolutely crazy. But yeah, so those are some things that I wanted to discuss. And for Soval to answer your question in a very, very long answer, not really doing much other than just sitting back and enjoying the rally here. That must be a good birthday gift. Yes, I mean it is. Birthday's tomorrow, so we'll see how the markets are doing tomorrow. But it's a good pre-birthday celebration with Tesla hitting a 1.5-year high. QQQs, Nasdaq, S&P, everything pushing up. Nvidia also near all-time highs, over 1%. And then we also have Palantir hitting a new all-time high. Even PayPal and I think Visa, some of those companies are doing very well. So you got PayPal up 2.7. Visa is also up over 4.4, so hitting a new all-time high for Visa, just over $306. IWM, hitting a 6% high. I think it might be at an all-time high as well. Yeah, there we go. IWM also at an all-time high right now, and Bitcoin's at an all-time high. So what we have here is S&P, Nasdaq, IWM, probably the Dow Jones as well. So DJI is not going to open up here for some time. Let's see. US 30 here. So we've got Dow Jones also up over 3% right now. 43,500. Also hitting a new all-time high. So we got so much all-time high coming in. Your portfolios better be hitting all-time high today as well. So Visa and other monopoly-like companies surging because Trump has his new advisor for everything. Elon, fire Lina Khan. I've been buying Tesla since before the stocks played. Today might be the first day in 4 years that I mentally feel green on every share I've ever bought. Yes, I'm going to be streaming FOMC on Thursday as well, Ray. So that's going to be, that's when I'm also going to be live to cover that. Sofi, what a winner today. What a relief from students wanting free education. And yes, Sofi moving up a little bit over 7% right now, so over 12.25. Now, Celsius also reported their numbers, so we can take a quick look on that. I think the stock was down after hours. It's down about 4.6%, and earnings miss and a revenue miss from the companies, so miss on both expectations here. Revenue came in at about 265 million, slightly less than what the expectations were, and practically no profit from the company as well. I've traded this before. I'm going to see if I can sell some puts here on CELH for the day, and we'll see. We'll see what kind of premiums we can get, because at the end of the day, again, like I said, it is a very, very disciplined approach to trading and investing in the markets. We're not taking on too much risk. We just want to hit base hits every single week so that we can get to our target of achieving 25 to 28 to as much as 30% every single year. Those SOXL puts are most likely going to be up 90% or more. So that's going to be a closeout. We're going to be closing those out today and freeing up some collateral. And then on Friday, I'm going to be sending out a lot more alerts, because with the SOXL puts, I'm going to free up just over $5,000. And then with the additional deposit that I made, I'm going to have some nice 15 to 20 grand to deploy on Friday for the options trade for next week. And that most likely will go into TMF. I'm still trying to decide, like, what's going to be the future of interest rates here. Maybe that's a trade that I can take on Thursday or Friday after the FOMC, because it is down over 8.7%. So TMF, TLT absolutely getting crushed here as 10-year treasuries move back above 4.4%. But how high are they going to go? That's the real question, because nobody really has the answer to that. We've got some level at 4.6 now. I think we were all eyeing 4.4 for some time. I think that was a very clear level that we were all watching. There's maybe some more resistance here at 4.49. It's gotten rejected there in the past, but it certainly is incredibly overbought, and it's just dragging down on the entire TMF and TLT market. I think bond market performed really poorly under President Biden than it did under President Trump. So these are the annualized rate of returns during U.S. presidential terms. This is the S&P 500 index going back as far as 1929. And you'll notice that George Bush and Richard Nixon are the two presidents that obviously the markets didn't perform as well. But the average return under U.S. presidential term has been 9.5%, with Trump coming in well over 10%. I think that's the second best Republican president performance after Gerald Ford. And then Joe Biden, of course, had a little bit less of an annualized performance compared to his predecessor, which is Barack Obama, which was a little bit over 10% on par with Donald Trump. But Donald Trump obviously had much better performance compared to both Obama and Joe Biden. Bill Clinton had a little bit better compared to Donald Trump. But if you scroll down, this is just the S&P 500, which is equities. But if you come over to the bond market had its worst 4 years of performance, with, of course, coming in negative since 1977. This was the worst annualized rate of return for the bond market. Bond market really got crushed over the last 4 years as TLT, TMF has just continued to underperform. And so, again, Trump coming in with a reasonable positive gain of 5%, Obama coming in just over 4%, George Bush coming in well over 5.5%, Bill Clinton almost 6.5%, almost 7%, and George Bush, Ronald Reagan coming in well over 10% on annualized rate of return for the bond market, with, of course, Joe Biden, the only president coming in with losses on the bond side. So bond market did not do well, in the last 4 years, basically. But the equity markets are more or less the same. Doesn't really matter who ends up winning this election. It was really just kind of removing that uncertainty from the market. That was a bigger thing as opposed to anything else from this election cycle here. So rolling the Tesla call, yes, I'm going to be planning to roll out my Tesla call. We'll see how far up and out we can go. I'm not going to go too crazy, but call premiums are going to be super crazy today. Call premiums are going to be very, very high, considering that we haven't seen this level in such a long time. And I can't even imagine what 290 calls or 285 calls are going to be selling for, especially if you go a couple of years out. I mean, those are just going to be like, I don't know, man, $6-7 grand a piece for Tesla call options. Like, that is going to be insane. There's going to be a lot of volatility on Tesla today. I feel like it's going to be just all over the place here, considering that we haven't seen this level in such a long time. Okay, now 70% of my portfolio in Tesla. That's perfect. That's awesome. Just make sure, be mindful of how much risk can you tolerate, because of course, if you've got too much allocation in one specific stock and if you're not comfortable with that, then it can of course, kind of take a toll on your health as well. So I've always mentioned this as one of the best measures of whether you're over or under allocated on a specific stock is how many times you think about it in a day. That is the best way to go about it. If you're constantly thinking about that stock and that position and where that market price is for that stock, you're probably over allocated in that company. If you don't think about it at all, right, that is in most cases a lot more appropriate in terms of your allocation for any specific stock. So, the idea is to either build up a high level of conviction that even if you are over allocated, you're not super concerned because you know everything about the company. And you really don't want to be in a position where you're significantly over allocated in that stock and you have no idea, what the company does or what's the future or anything around that company, right? Because then you're most likely going to be, constantly thinking about it almost every day. So, that's a lot of exposure on one stock, Jasper, but congrats. Yes. All I feel right now, Joe says, all I feel right now is the dreaded should have bought more. Yeah, in the markets, there's always going to be those three famous words: could have, should have, would have, right? And what I tell in most circumstances is past is already done. What you can do is, of course, change the future, take a lesson, learn from it, and move on, because nobody can go back and change the past. All of us, have we gone back 2 years, we would have obviously made very different decisions. All in on Nvidia, all in on Tesla, maybe all in on a lot of other companies, right? But we can't do that. So it is, you got to be very comfortable with where you are, and comparing yourself with someone else's progress is a sure shot way of not just being able to focus on your own journey. It's going to distract you. So the only person you need to compare yourself with is yourself from a few years ago. And if you're doing better, even if that is a slight improvement, slight betterment from where you were, that's a huge accomplishment. And that's what I tell people is don't compare, because everyone's on a different journey. Everyone's got a different risk tolerance, different time horizon. Everything is different. No two portfolios are ever going to be the same, right? It's always going to be different. So you're always going to be comparing apples to oranges. So just compare yourself to yourself. And if you're making progress, that's all that matters. So the real question is, how high can they be tolerated before they absolutely have to come down? The 10-year treasuries, that's the real question there. With the bond market is how high can they really go? And it's eventually going to be playing. It already should be playing a role in the equity markets, because if the risk-free rate is over 4%, and you can expect to make the S&P 500, let's say about 8%. Then you're really kind of coming down on the equity risk premium significantly. The premium that you're getting to invest in the equities, the stock market versus the bond market, is already diminishing significantly, because the increase in the rate of the 10-year treasuries has been more, right? It's gone up over 23% since September versus the growth in the S&P 500. It's gone up a little bit over 7%. So obviously it's outperformed the S&P from a yield standpoint and how much it's gone up. So it should already be playing a role in the bond market here, and in the equity markets, but it still hasn't. So the momentum, seems to be very strong, and the dollar index is also, take a look at that recovery from its lows of 100. It's pushed up almost 5%, and the next target really is going to be 106, 107 for the dollar index. Yes, Sofi is going up so much right now. Why doesn't it get the love Uber is selling off? Well, I don't know. Uber has definitely got a little bit of, competition for self-driving, for cyber cabs, and, with everything that Tesla's trying to achieve. And I think that is, that could be one of the reasons why Uber is still underperforming a little bit. And, look, it has done really well from its lows of $20, right? So, obviously doing a lot better, 335% gain, now finally profitable after several years, growing. But what is going to be that long-term, for Uber, right? When it comes to Tesla, FSD, the software getting solved, Tesla kind of surpassing multiple levels of full self-driving levels, that is obviously going to be putting impact and pressure on self-driving, robotaxi companies, including Waymo, Uber, and Lyft. So Enphase, I know, is one stock that is getting absolutely wrecked right now. What's your assumption on DJT? So Tay, I already mentioned DJT. I think is one worth taking profit on, because fundamentally I can't really speak much about it because it's not really showing us any revenues and generating losses every single day. So it's mostly been a speculative play on elections. So the fact that it's up over 30% pre-market, it's a very nice move. It's already starting to give back on some of those gains, and resistance right now I've already pointed out at $55 for DJT. Yeah, Sherwood, we just talked about DJT here, Trump Media and Technology Group. Okay, bond market tells us inflation is coming back to the menu, so that is the worst case scenario for the Fed, because then they'll have to kind of go back to raising interest rates, right? And that will not be good. You think Tesla can break its all-time high in the next 12 months, Thomas? I don't know about 12 months being an appropriate time, especially when you consider there's still a lot of regulatory hurdles for Tesla going into next year. Maybe they're going to be better received after what's just taken place in the last 24 hours. But when it comes to 300, I'm pretty confident that Tesla can break out above 300 in the next 12 months. And that's simply going to be driven by the higher delivery volumes on the back of more affordable vehicles. With the Optimus and Cybercab getting into volume production in 2026, and more updates on FSD, right? V13, and again, fewer and fewer interventions between more and more miles. So that in itself, I think, is what's going to be a more revenue and earnings driven catalyst, where there's going to be more institutional liquidity coming into the stock to push us above 300. All-time high, which is $411 from exactly 3 years ago. It really is going to be a whole question around regulatory measures, where, when, and how quickly Tesla can win those regulatory battles in each state, and how quickly can they roll out their cybercabs, unsupervised full self-driving. So there's a lot of questions around that we need answers for before we can confidently assume that Tesla is going to be at all-time highs. Because all-time highs, we have to understand that Tesla is going to be well over 1.2 trillion. And if revenues are coming in about 100 billion, that's about 12 times sales. Already right now, after today, it's going to be at 9 times sales. So going from 9 to 12 times sales is not a big challenge, but it's really to demand such high multiples, it has to deliver. And, that is dependent on a lot of other factors, including the regulatory measures that I mentioned. So that's going to be the quick take on that. Okay, about 2,000 VTI, conservative buy 3 weeks ago. So VTI, again, I think that's the total stock market ETF. There you go. Very nice move, up over 2.5%. So doing really, really well. Congrats on that, Glenn. Jasper says, go big or go home. Aim for the moon here. SMCI is a buy. So I would stay away from Super Micro, everyone. I know there's a lot of questions coming in for Super Micro. We've talked about this stock before. And to be honest, this is not to brag or anything. We talked about this stock a couple of years ago when it was on nobody's radar. This is a stock that nobody was talking about. As a community, we are proud to kind of get in on this early and had a nice, I obviously didn't have 1,000% gain, had a nice, decent profit, but a lot of people ended up trading for multiple hundreds of percentage of profits for this company. Then I did more videos on this, talking about how it has gotten to extremely overvalued levels. Fundamentally speaking, it's a stock that you want to avoid at those prices. Of course, nobody could have foreseen what's going to be the auditing issues and all the other accounting issues that we've faced, and of course the Hindenburg short report coming in, casting a more doubt on the entire company's accounting practices, and then of course EY getting rid of them instead of SMCI getting rid of the account auditor was the other way around. So definitely there's a lot of red flags with this company at this moment until we get more clarity, until the dust settles anymore. We just can't rely on any of the numbers that they're reporting. So you really just want to take a step back. There's plenty of other opportunities right now. support. It's coming down to a pretty good support level that we haven't seen since October 23. That's going to be $22, $23. And we'll see if we get a bounce back higher from these levels here, down almost 18% after reporting earnings. But it's, how much weight you want to put into the numbers they're reporting when they're not audited by a top Big Four auditing firm. So, there's plenty of other opportunities other than SMCI. So I would stay away for now. Bitcoin is the winner. Yes, Karthik is Enphase, a stock to avoid. From a fundamental standpoint, we've talked about this company before. I've done a lot of videos on this. It's got a lot of technological advancement against a lot of its competitors with the microinverter technology, with the insights that it provides, even with the 5P battery. There's a lot of tech that's involved with Enphase that's giving them the upper hand when it comes to this solar renewable energy market. But we already know what's causing this sell-off, right? Almost 13% down on the outcome of the elections. I wouldn't consider this is a stock to completely avoid. It is a stock to just wait and watch the progress on the fundamentals. We've talked about this on the channel before, where if you come over to Enphase's numbers, it is showing us some early signs of progress. But at the same time, if you come over to, let's say, the quarterly numbers for the last 12 quarters, let's say, and this is the most recent quarter that we just heard from in the September quarter. Take a look at revenues, right? It peaked out at 2022, last quarter 22, first couple quarters of 23. Then it started to decline rapidly. Revenues more than halved from a couple years ago. And then now we're starting to see some acceleration back up. I mean, $380 million reported. Guidance, I think, came in a little bit lighter than what the expectations were. But the bottom line is that they are on their way back up. If you plot for, let's say, net income, same story, right? Had massive profitability. We're talking $150, $160 million in profits every single quarter. Came down to 114, came down to 21, and then went into losses, right? And what was the main reasons for this losses? Revenue decline and cost was relatively up. So if you take a look at revenue, which obviously came down, but if you plot for operating expenses, which is also going to be on our platform here, let's see, where's operating income or loss? There's the total operating expense. If you plot for that, take a look. It's been relatively stable, right? So when you've got a company that's got a fundamental positioning like this, where you've got revenues coming down and operating expenses are flat, every single quarter they're burning through about $130, $150 million, and revenues coming down. What does this lead to? This leads to lower margins, leads to lower profits. It leads to potential losses, which is exactly what we saw. So revenues are in blue, operating expenses are in green, and now if I plot for net income, you'll see a very clear picture that it went from, generating profits to then losses because of the significant decline in revenue. And so that was one of the biggest reasons why the stock has not been performing well. A lot of the times when you'll notice a stock is performing, really well versus the one that it's not, if you take a look at fundamentals and go over to quarterly numbers, in most cases, you will find the quarter-over-quarter, year-over-year numbers improving or getting worse. In most cases. Not all the cases, but in most cases, because that is how institutions and Wall Street trades. They look at the next 4 quarters, and if the company is growing revenues, it's great. And if the profitability is increasing, if the margins are getting better, it's the best thing in the world for any Wall Street investor. But if the opposite is also true, if this is happening, this is the picture, they're going to stay away from it. And take a look at Palantir, how different their quarterly numbers are. So if you come over to the last, let's say, 12 quarters, revenue, every single quarter has gone up, every single quarter. Not only are they growing year over year, but they're also increasing quarter over quarter. Take a look at gross profit, same thing. Every single quarter, it's just been pushing up. And the more important number was the net income, which was, of course, generating losses over here. And then take a look. Switched back to profitability, and every single quarter, they've been up ever since. So there you go. That's the increase that we're seeing. So, and in most cases, if profitability increases on a quarter-over-quarter basis, that's the main reason why the stock is performing really well. So in terms of Enphase Energy, I think it's a really just wait and observe type situation, whether the numbers get better going into 2025, if rates come down, and if the sell-through rates increase and get better, because the technology is there. It's got good technology when it comes to microinverters, but it's really just a question of whether we're going to see some improvement in the numbers or not. Sonoman says, VIX is low. Time to buy? So what is the saying, folks? What is the saying that we have on the channel? Is it VIX is low and it's time to buy, or is it something else? What is the saying that we have on the channel? I want to see who here can remind us of what the saying is on the channel. Okay, so I think this is going to be the last Powell's meeting. So there's one more in December, Amir. So this is not the last one. There's one more in December. Sofi, we all love Sofi. Sofi doing really well, that's for sure. But yeah, let us know, what is the saying that we go with when it comes to volatility? Is it when the VIX is low, it's time to buy, or is it something else? The saying is buy or die. Wait, when high you buy, low is go. Yes. So when the VIX is high, it's time to buy. It's not when it's low that it's time to buy. When the VIX is high, it's time to buy. And when the VIX is low, it's not to sell. I want to be very clear. It's not the time to sell, or it's not the time to go, but it's really just the time to be cautious. The reason for this adjustment is because, as we already know, that markets have spent majority of their times near all-time highs. I mean, it's pretty obvious that 87% of the times markets remain, well within their all-time highs. And there's a lot of spreadsheets that I've talked about, but if you were to, let's see, what was that spreadsheet here? SPX, I think. If I bring it up again, you will see this is the analysis that we have conducted on the channel many times over. And in the last 51 years, you'll notice that 91%, 91, or let's say 92% of the times, the S&P has really spent within 30% of its all-time highs. If you go to 20%, so less than 20% of all-time highs, 78% of the times. And more than half the times, 56% of the times in the last 51 years, so more than half, which is about 29 years, it has spent well within 10% of its all-time highs. So, the markets are within 10% of all-time highs. That clearly means the volatility has been at pretty low levels, and there's never been a reason to sell just purely based on volatility. It's always been one of the reasons to buy purely based on volatility when it's higher, but it's not been the other way around. Okay, let's see. So market's going to open in about 24 minutes here, folks. We've got a huge day in front of us with Tesla here, 282, Nvidia here, 142. We got S&P 500 up 2% right now. QQQs are 1.6, and most likely when it comes to market concentration, we're going to have close to $1 trillion day in the market right now. But the Money Invest Index 3.61, this number will get updated once the market opens, because we've also got market breadth that is accounted for, and 3.61 is where we are. I'm guessing this number is going to be most likely above 3.9, closer to 4, but again, we'll find out as soon as the market opens here. Tesla today, $300, 57%. 57%. People, more than half of you guys are expecting Tesla to be at $300 or more today. That's going to be crazy. If it gets up to $300, let's see, what can we do? What can we do as a community? Maybe a longer live stream tomorrow, longer birthday and FOMC live stream tomorrow, if Tesla breaks above $300 today. Are Chinese stocks doomed? Well, depends on which ones you guys are looking for. If you take a look at KVEB, we're seeing it down 3.4%. There's been a lot of liquidity, flooding out of. So what really happened, and this is my speculation, and this is also based on a lot of liquidities and timing here. As soon as the CCP kind of moved to a very, very quantitative easing policy, right? So they actually started lowering interest rates very aggressively, and they went into full bazooka mode where they want to inject a lot of liquidity in the markets. There was a bigger sell-off in Indian stocks. If you take a look at Nifty 50, which is one of the indexes over in India, it's been selling off aggressively, right? It is down over 9% from the end of September, right? So it's been well over a month. It's been selling off 9%. And a lot of that liquidity went into China. So we had, pretty big sell-off here towards the end of September for Indian stocks, and a 54% gain in KVEB, which was a massive inflow. So, if you kind of put these charts side by side, you'll notice a very clear pattern where there was a significant liquidity outflow from Indian stocks over to China. So we're talking, let's say November 27, November 30th. You can see a massive inflow here versus, of course, a massive outflow over here. And now what's happening is that we're seeing a little bit of rotation, and now a little bit more out of China over into the U.S. And so that's where capital has just been flooding out, in and out of, based on what's happening with a lot of these macro factors. So I wouldn't say that China stocks are doomed. It's just that long term, if you can find value, sure, there's opportunity. I know there's a few members in our community that are very bullish on Alibaba, that they still believe that it's a stock that's worth buying at these levels. It's undervalued. It got up to as much as 117. Of course, it's been selling off since after that resistance got tagged at that level, and it's back down almost 4% at $95. So this is a resistance here for Alibaba, and we got a support sitting down to as low as $77. So that right there is going to be that level to also keep in mind. So Arpad, I've already covered DJT, in quite detail. Pizza party, shave your head, live stream now. I'd love to hear your thoughts on SMCI. Is the market manipulation? So, okay, DJT, SMCI, we've discussed a lot of these companies on the live stream. So, folks, if you could do me a favor, just go back maybe 10 minutes, 15 minutes. I've covered those companies in detail, shared my thoughts on Enphase, shared my thoughts on SMCI, shared my thoughts on AMD, shared my thoughts on DJT as well. So we've spent, 4 or 5 minutes on pretty much every stock that you guys have asked for. It's just, of course, if you've got new people joining in, they're going to be the same questions, but you can go back and check out those bits and pieces of the live stream. When the VIX is low, it's enjoy your gains. Yes, I agree. I think that's a much better way to put it. Buy some blow. VIX up, time to deploy capital. Yes, right now it's not here yet. You know what? So since we have our MoneyVest meetup coming up in Florida, I'm going to show you guys something. So hold on 1 minute. So I just got the t-shirts printed, right, from here in Dubai that I'm going to be taking over, and it's one of the things that I write down. So one of the things that I've written down on the t-shirt is literally, I just thought of it. When the VIX is high, it's time to buy. And I've also put down at the very bottom, let the price come to you. I don't know if you guys can see it, if I'm pointing to the camera correctly. Let me just pull it up. Let's see. Since we're on the topic of volatility, there we go. Yeah, when the VIX is high, it's time to buy, and then let the price come to you. So we've got that on the t-shirt, so that it kind of drills really well. It's a message for life, I feel. But where's the green mic t-shirt? I was actually planning on putting in a red mic as well, or a green mic, but I don't know. It was just like it worked better in terms of other designs. We're working on a few other designs, so we'll see, what you guys love the most, and yeah, we're gonna make them available. But of course, these ones are for the meetup. They're on me. We'll be having a pretty good time in Florida. So we'll talk a lot about Tesla and Nvidia and the markets, of course, pretty much every stock. Yeah, thank you so much. Appreciate you guys. And let's get back to it. So markets open in about 15 minutes or so. And we'll see how much the markets can hold up these gains, because we've also been very used to kind of these gains kind of getting fading out entire days. So Meta over 700 by the year end. Well, it's possible. I mean, the post-election rally, November, December seasonality. So if I bring up seasonality here, although it hasn't worked this year, I'll be very honest. I mean, August, September was supposed to be a little bit more brutal, but we saw very nice gains. However, the first week has been, pretty significant sell-off in the first week of October and first week of September and first week of August as well. So we didn't really see, the entire month to be red, but of course we did see. Yes, Jenser, I have you down. Don't worry. You've already mentioned it in the Discord, and we've got t-shirts for everybody who's going to be visiting us in the Tampa meetup. Okay, I'm having some issues with the spreadsheet here. Let me see if I can pull it up. Seasonality. There we go. So seasonality, I went back to 1900s basically, looking at a lot of data points, and this is what we've been able to find. As you'll notice, that seasonality over the last several years has been very strong for November. November has actually been the best month for the markets, especially in the last, let's say, 24 years. 75% probability that it's going to be higher. However, again, I want to point out that just because it's happened in the past doesn't mean it's going to happen again. Similar to what we witnessed in September, October, that seasonality didn't really work out as much because September was supposed to be red. I think it ended up being green for the market. So let me just go over to the monthly chart here very quickly for 1 second. So September 2024, yes, we were up over 2%. And October, we were slightly down 1%. So October, of course, we 2 for me. One per person answer, because that's how many I've essentially taken count. So Jeremy, no plans as of yet, because I'm still figuring out the shipping plans and everything. So once it's available, I'll let you guys know. But right now, it's usually just for the people that meet up. But I'll definitely see what I can do to have them become available for everyone, because it's going to be very MoneyVest, of course, unique and specific. We're going to include for red mic and green mic as well, and some other really popular sayings that we have on the channel. But yes, speaking of seasonality, again, November in the last, let's say, since 1975, it's been the best month next to December. So post-election, and we already know that there's a 100% probability the markets are going to close green for the entire year, because if the first 9 months, 10 months are strong, chances are almost always 100% that we're going to be closing in the entire year to be very positive. And the next couple months to be down, I think the probability is also less than 20%, as based on historical data. So I think to pretty much close out the year, we can relax. I think it's going to be pretty solid, but it's just a question of how much higher are we going to get to. I think 6,000 is possible on the S&P before the end of this year. And that's going to lead to, of course, gains across the board for all the stocks, for a lot of these sectors and individual stocks here. So, yes, NVO, Novo Nordisk, we're also going to be talking about. Alexander, so that's going to be towards the last week of November, the week before Thanksgiving is when we're having our meetup. And Pritesh, do a black version. Yes, we actually have 2 different colors. But the t-shirt color is the same. It's the white t-shirt, but with 2 different colored logos. So we've got a nice little mix and match for that. Black t-shirt, we did the black t-shirts over in New York. So everybody who joined us a couple of years ago in New York, we did the black t-shirts for them. But this time we want to go a little bit different. So we did white t-shirts this time. But eventually there's going to be both black and white. So Novo Nordisk, yes, it's a stock that's been selling off. It's actually a very, very high quality company. I think it is a part of our shopping list as well. And a very nice uptrend. It's been selling off from its highs of 146 down over 25%. And the support level is sitting roughly at 104. So that's the level that I have on Novo Nordisk. And all the way down to as low as $86. But I think the fair value is going to be a little bit under $100. I'll have to check what that fair value is, but it is still, very, very solid company. We're ready for the Santa rally now. So whether PK, did you deploy your money today, Karthik? So not yet. I mean, markets are at an all-time high. I was really looking forward to any type of sell-off, volatility, spiking, or the MoneyVest index coming down so that I can deploy capital. I've already got cash sitting on the sidelines right now, but it's just, markets are just pushing up to new all-time highs. So there's nothing wrong. I mean, go back to the liquidity framework, and if I'm sitting on, let's say, 20, maybe 22% cash, that's fine. I mean, that's a comfortable position for me where I can always look for deals. I can always be on the hunt for deals. And so, 80, 85% invested, to me, that's more than enough as per my risk tolerance. So I never want to be like all in, but have like literally zero cash, because you just never know what kind of opportunities the market's going to throw at you. And in my opinion, I think it's always better to have some dry powder sitting on the sidelines, even if the markets are an all-time high, even if you're just like ripping to all-time highs and there's literally no deals. I think it's still worthwhile having at least some cash sitting on the sidelines. Pratt, so we actually did a Los Angeles meetup last year in June or July of 2023. So last year was California. The year before that was New York. And this time we're doing it in Florida. So, and then next year we're most likely going to do some, we're going to kind of try to hit 2 places. Toronto is most likely going to be one of them. And then one more place in the US where we haven't done it yet. So depends on, where a lot of people are kind of located and how many people can kind of make the meetup there. So there's a lot of factors that play there. So Lucid and Rivian, I don't know. I haven't looked at those companies fundamentally speaking. I have talked about it before, but I'm having some issues with my Wi-Fi here. Yeah, let me just reload this page. Hopefully there's no lags. Yeah, there's some problems with the Wi-Fi that are happening right now. But yeah, so Rivian and Lucid, it comes really down to the bottom line. I think with most companies and most stocks, it really is going to come down to what kind of profitability are we looking at for these businesses. And in most instances, when it comes to big money, which is what really moves the stock, which is institutional money, Wall Street, they're going to be focusing very much on the bottom line. And until that happens, I don't think there's going to be a lot of momentum, at least not a sustainable momentum. We may see these big pops. And then, of course, that move is going to get entirely faded out because of the lack of profitability. Lack of fundamentals, it's kind of holding up the stock higher. So for Rivian, Lucid, I mean, these are companies that eventually if they become profitable, it's worth looking into. And even from a story standpoint, if you've done your research, there's mostly going to be qualitative factors that are going to be driving you into this stock. But until then, I think it really is an execution thing. So as I've mentioned this before in my previous updates, is that every investment thesis comprises of 2 factors, which is qualitative and quantitative. The qualitative is essentially looking at the story itself, right? It doesn't just apply to stocks, it applies to everything. If you're buying real estate, if you're investing in some project, investing in other company, private equity, or even stock, or even if you're investing in a person, if you're trying to actually hire someone, it all comes down to 2 things, qualitative and quantitative, right? There's hard skills and soft skills. And so that's what we're trying to understand about every single stock is if the qualitative makes sense, if it's got a good story, if it's got good management, if it's got a good brand, if it's got a good potential, a lot of the things that cannot be quantified, these are intangibles, you've got to assess that and then tie that in with the actual quantitative analysis, which is the numbers, the revenue, the cash flow, the earnings, the valuation, the balance sheet, everything that can be quantified. And then you combine those 2 things, and that's how you arrive at your thesis of whether it makes sense to buy or to pass, to sell, whatever decision you end up making. Now, if a company has got a very strong story and a potential and a concept, but no fundamentals, there's big risk that you're taking on. And that risk is execution. Is the company going to execute eventually to become profitable? And so people who take that risk also have the highest reward potential, but the probability of success is also really low. Think Palantir a couple of years ago, right? Wall Street was not bullish. Institutional investors were absolutely not looking at the stock because it carried the highest level of risk. The execution risk, which is the company going to execute the right way, which can lead to higher growth rates, higher margins, and higher profitability? If the answer is yes, those investors are going to take that risk. If the answer is no, those investors are probably not going to take that risk. So that's what it ends up being. And if you're only investing in a stock based on the stories, the qualitative analysis, and not the quantity, which is the numbers, then I would recommend that you start slow and then you build your position up as your confidence also builds in that company as they're executing. So I hope that makes sense. By the way, can you guys hear me in the live chat? I feel like there might be some connection issues. So as long as I'm coming through okay, just give me a thumbs up. And we should be all set here. Yeah, I think my chat here is kind of frozen. Okay, everyone. So we got about 6 minutes. 6 minutes left for the markets to open here. And do me a favor, drop a like, subscribe to the channel if you haven't already, and share this live stream with everyone so we can have more people join us as this party begins. How much are you guys expecting for the markets to be up? S&P 500, give me a number. What is going to be this number today? S&P 500 market cap change. Are we talking 500 billion, 700 billion, 900 billion, 1 trillion, more than a trillion? What is going to be that number? Let's see it. Got over 400 people watching. I want to hear at least 400 responses for what that number is going to be for S&P 500 today after the market opens in about 6 minutes here. Six minutes to go. Vix says, hi, it's time to cry. Yes, it's time to cry because there's no buying opportunities, right? $1 trillion. West Palm Beach to party with the president. 1 trillion, 800 billion, 700 billion, 500 billion, 500 billion, 900 trillion, Marcus. I'm sure you mean 900 billion there. Gilly 8 billion, super excited, honestly got no idea. So we'll see, we'll refresh this page in 5 minutes and we'll see what that day change in the S&P is, how much liquidity is coming into this market rally. So we got top left, S&P 500 on the bottom right here. Tesla we got on the top left. We got Nvidia on the bottom left, and we got QQQs, which is the NASDAQ 100 on the top right. The volatility getting crushed here, down 22%. Bitcoin's at an all-time high, just under 74,000. Crude oil is also coming down, just under 71 bucks per barrel. And the big jump here in treasuries, sitting at just shy of 4.5%. So 4.5%. We're just shy of 4.5% at the moment. So massive day getting started. It'd be crazy. Like, it'd be, 1.5 years. I think investors have waited a long time for Tesla to get to that level. So it's definitely going to be a pretty exciting day. It's just the question is whether these gains are going to hold up or not. Or are we going to see some profit taking, given that I think we're most likely going to be hitting a pretty euphoric intraday momentum here from the market. Because, this is just a blow the top off rally for the markets right now. Never got that last dip before the Santa rally, Pratt says. I mean, you never know. We could still see something in the market. Any type of dips, any type of pullbacks could be good buying opportunities. And that's going to be the whole game plan. And especially over the next 4 years, I'm very optimistic about the U.S. economy and the markets and the earnings per share. And so I'm really going to be doubling down on a lot of stocks and a lot of ETFs. Just will be very, very bullish. But of course, being very realistic as well, right, on the short to medium term. And so we're going to be following a very, very disciplined game plan. Reen says, hope they don't hold. The gains not hold. 299 to 284. We just crossed above 284 right now for Tesla. With just about a few more minutes left for markets to open. And Nvidia here is up 2%. We got S&P up 2% and QQQ's up 1.7. Let's do this, folks. Let's begin the party here after the elections. My guess is close to $1 trillion gain in the S&P right at the open, because 2% of 52 trillion is going to put us just over $1 trillion of inflows in the market. So that's going to be my guess, is 1 trillion big ones for the S&P coming in. So anyway, adding more companies to the earnings calendar. For example, I'm invested in RKLB and BN, and they have earnings calls on the 12th and 13th and can find them on the calendar. So that's probably because of the market cap threshold that we have set. We've set the companies to $10 billion or higher in terms of market cap. But we'll see what we can do. Maybe we can reduce that down to 5 billion. And because then it becomes too crowded in terms of the number of companies. But we'll see what we can do with Rocket Labs and then BN to include for them as well. We'll kind of reduce that threshold to 5 billion maybe. So here we go, folks. We've got the, if you take a look at the Magnificent 7 index, which we have created on the channel, which is right there, it's got included for all 7 companies. It is up over 1.5%. So collectively, the Mag 7s are up 1.5%, trading at just over 2,000 at the moment. That's the index value for the Magnificent 7. And we got 30 more seconds left for the markets to open. Drop a like, subscribe, and let's get started. Let's get started. So I want to see a lot of rocket emojis today. I know it's going to be crazy, but I want to see a lot of rocket emojis in the channel, on the chat here, as we just see this explosion begin in about 20 seconds here. So BN has 89 billion. Is it a ADR? Do you know if it's an ADR? Because if it's an ADR, then we may not have that either. Brookfield Corporation. Then it should be there. I'll check the earnings calendar. It should be there. But here we go. Markets are open. I'm just going to reload this page to see what kind of gains are we seeing. 827 billion. Okay, it's not accounting for the full change here, 1.5%. So maybe give it a few minutes. And once we get that update here, we're going to be close to $1 trillion in gains. S&P 500 up 2%. Tesla 282.59, hitting a new 52-week high of 285.50. And we've got QQQs up over 1.7. Nvidia is up 2.5. All Magnificent 7 stocks are up except for Meta. Meta is still struggling a little bit, down about 1.7%. And Apple is down about 70 basis points. But of course, Tesla gaining the most of that momentum, coming in with $116 billion worth of gains here, and the market cap sitting at just over $900 billion. That's based on basic shares outstanding, but if you take into account the diluted shares outstanding, we're almost up to close to $1 trillion in market cap here for Tesla. So incredible momentum, and there we go. Boom, it's now updated over $1 trillion worth of inflows in the S&P 500 today, and that's over a 2% gain in the markets. Nvidia also approaching almost a new all-time high, sitting at just under 144. If you take a look at Pltr, and we should include for Pltr here, up over 3%, just trading a little bit under $53, and we'll include for Sofi over on this chart. So we got Pltr, Sofi, Sofi $12, up over 6% right now. Incredible. $12. So I've got $15 and $16 calls on Sofi right now. So we'll see how high this train is gonna go. Pltr hitting a new all-time high at $53.50, just over $53, and Sofi is just over $12 at the moment. And Tesla here, 284 is where it's at. We'll see if it actually breaks above its pre-market high of 290. Are we gonna see 290 on Tesla? That's the real question. Are we going to see $290 on Tesla, or is it going to get a bit of a fade out here at the open? We got 285 on the print, 13% higher. We're about $4 or $5 away from the historical 290 level here on Tesla. So just let's wait and see. I want to see a lot of rockets here if we get to 290, folks. 290, and I want to see the chat just go absolutely crazy, because 290 is going to be quite a crazy number, something that we haven't seen in over 1.5 years. And of course, breakout over 300 is going to put us to a 2-year high since September of 22. So 287 is the high for the day for Tesla. Can it break above its pre-market high of 290? That's the real question that we're watching. S&P 500 still up 2%. We've got QQQs just a little bit under $500. I think it's a 52-week high for, not quite, just a little bit shy on QQQs here. Sofi is up to 1210. Pltr also pushing up over 4%. 53.50 is still the all-time high. And we got Tesla at 288. Just a couple dollars away from 290 on Tesla. So up 14.5%. 14.5% right now. And the high today just printed 288. There's some bids coming in at over 288.26. We're just a little bit shy of 290 right now. Just climbing up. Just a little bit shy of 290. We'll see if it breaks out. We're very, very close. 289. 289 is now the high for Tesla. It's also the new 52-week high for Tesla as well. QQQs are up almost 2%. Nvidia just a little bit shy of all-time highs, with, of course, Palantir pushing up to a new all-time high, folks. 5% higher, just a little bit shy of $54 for Palantir. And Tesla, we are so close. We're off by 70 cents. 70 cents for a breakout above 290. Breakout above 290, we're off by just 70 cents on the 52-week highs. So that is the pre-market high. So I think it's going to be a little bit more of a task for Tesla to break above this level, but we'll keep a close eye. So there we go. Everything just absolutely booming right now still. QQQs are up almost 2%. Meta's the only stock that is now down almost 3%. Everything else is green in the Magnificent Seven. Come take a look at sectors-wise. We've got everything that's up except for the bond market, of course. Bonds are struggling, down over 3.2%. Utilities and staples and real estate also selling off, and everything else is up. Financials up 5%. Financials are up the most, 5%, than industrials, energy, discretionary, technology. There we go. We got another attempt to 290. 290, again, getting rejected at 289.31. So this is the second attempt for Tesla to break out above 290 here on the 52-week high. That's going to be sitting at 289.49. So we're just shy of 289.50 right now for Tesla. Don't forget, Nvidia also making its way over to all-time highs here. How are we looking on the day, folks? I'm sure you guys are just looking at your portfolio and going absolutely crazy right now because of the gains that we're seeing right now. Tesla getting rejected once again at 290. That's the pre-market high. And we'll see if there's any more momentum that comes in to break us above 290. But Nvidia, 144, just shy of 144. Palantir hit a new all-time high at $54. And Sofi seeing some selling pressure. And yes, Nvidia earnings are coming up on the 20th. Nvidia reports earnings on November 20th. Man, QQQs, they've now surpassed the S&P 500 daily gain, 2.05, and now we got the Nasdaq up over 2.09. So QQQs are clearly doing better than the S&P 500 right now. Enphase is down 15%. So if you come over to our main watch list, and let's take a look at what's actually moving to the downside. We've got Enphase down 17%. That's the biggest loser here. Truly was also down 45%. Then we got Zim, integrated shipping down over 7%. Applied Materials, American Towers, excuse me. So AMT is down. We got Uber, Alibaba, Novo Nordisk, Snapchat, ELF, Vertex, Asml, 670, so slightly lower. And then, of course, everything else is very, very green right now. So third and final attempt, I feel like, from Tesla, 290, third time's the charm. Guess we'll find out here in just a few seconds. Nvidia, by the way, is just about 20 cents away from all-time highs. Man, I really, really got to roll my calls out. Feel like it's going to be a rollout till the end of time, because Nvidia is really just not giving me any breaks here. Third and final attempt for Tesla to break above 290. Third time's a charm. What are we thinking? Folks? Quick. Breakout or rejection? Breakout or rejection above 290. This is it. This is the moment. 290. Nvidia coming in with a all-time high, just off by 7 cents. 7 cents right now. If Nvidia hits an all-time high the same day as Palantir is hitting an all-time high, I mean, it's pretty glorious. It is pretty glorious, if you ask me. And if Tesla hits a new 52-week high, it'll be a glorious day for pretty much a lot of traders and investors today. Man, the Nasdaq is just not stopping here. Oof, Tesla just really struggling at 290 here. It's just not able to break above 290. So Maruf, Enphase is down, because obviously because of the election results that we just got. And for me, it's really a fundamental story. if it starts to show signs of improvement in the next couple of quarters, numbers keep coming in strongly, then I think there's potential there. But until then, I'm just going to sit back and observe Enphase's numbers, sell-through rates, interest rates. There's a lot of factors at play. But Tesla here, struggling at 290. We just need one strong bid to come in above 290, and we are with that breakout. Volume is pretty strong. We're already 22 million shares traded, and the average is about 78 million, and we're only about 9 minutes into the open. So I think it's going to be most likely about 100 million share trade a day. Nvidia's volume is also pretty strong, coming in at 14 million already. Tesla really struggling at 290 here. 289.59 is the high for 52 weeks and also for the day, and it's just not able to break above this level. Pre-market, we already got some indication there. Again, you got like a triple top there for Tesla, so weren't able to break out above that. Palantir still up 5.5%, $54, and we've got Sofi here up 4%. Bond market still struggling here. I think the put premiums are going to be very strong for TMF, so we're going to take a look at that very soon, because TMF, if you were to, let's say, sell puts on TMF for, let's just quickly take a look at it. If you look at TMF, and let's see, options, and if you're looking at next Friday, for example, which is going to be about November 15th, the put premiums for TMF, let's see, $40 is going to be 32 cents, negative 0.16 delta, which is not bad, and we got 39.22 cents, $42.79. So, I mean, those are some reasonable support levels for TMF. Roughly around $42 to $38, anything between those two numbers. So $40 is going to be 34 cents, which I guess is not terrible. You're liking the sell auction room. Come on, video, you can do it in my Waterboy voice. ELF Beauty down. Yeah, I mean, obviously there's a lot of losers in this market rally as well. Enphase being the obvious one. ASML also not finding any momentum on the day, so selling off a little bit. So if you take a look, I mean, we've got Snapchat, we've got Neo selling off over 5.6, Alibaba, Enphase down over 17.5%. Then we got Logitech, American Towers, we got Uber, Novo Nordisk. There's a lot of stocks. Vertex Pharmaceutical reported their numbers recently. That's also selling off. By the way, Nvidia hit a new all-time high. So, congratulations, everyone. Nvidia with a brand new all-time high for today. SMCI bring down Nvidia? Not really. I don't think that's gonna happen. SMCI has their own issues going on with their own company, but Nvidia hitting a new all-time high here is just fantastic. 144.63. Let's take a look at IWM and how our small cap's doing right now. And we are sitting at a gain of about 4.7%, although there's been some selling pressure intraday. So 356%. We can't even get past 290, folks. We got 664 votes. So, of course, a lot of people are expecting for Tesla to break out above 300, but the first hurdle is 290. If it breaks above 290, we've got a higher probability of getting to $300, but if it's not able to capture like all that supply there that's just been sitting there for pre-market, we got a triple top resistance there for Tesla. I think it's really going to be a hard time, getting us to $300. Because if we're not able to break out above 290. Let's take a look at DJT. And there's going to be some profit taking on this stock, because this is mostly an election play. It was very speculative to begin with. So there we go. It's already down significantly from its day high of well over $45 back down to 39. So So Soccer TV India, dude, I'm an integrated chip designer, and I'm telling you to sell off your ASML mid next year. It's a cyclical stock. The break through happened last year, and now they are back into R&D. So I've got a question. Is it mostly like a short to medium term? You feel like ASML is going to struggle? What about the long term? Say like 5 years out, when they have completely gotten rid of their China revenues and they're mostly focusing on American and European markets to kind of supply their EUV lithography equipment. What are your thoughts on that? Are you expecting for ASML to underperform over the next, let's say, 5 years? Or is it most like a short to medium term analysis that you've given us that they're investing heavily in R&D and they're going to struggle, cyclicality wise, they're going to struggle at least for the next several years out. So I'm kind of curious on that as well, because from what I've researched on ASML, I've done a whole detailed video on this company as well. Obviously it's been under a lot of pressure with the sanctions put forth by the US over on China, and the regulations that are intact, and China revenues are diminishing for the company overall. But I really am pricing in for a growth in ASML's revenue, which is excluding for China, and coming in with some very reasonable expectations. I think fair value came down to like mid 500s, low 600s. So obviously this is not a stock where I'm heavy at these levels. I'm not like a buyer at these prices. I picked up just a few shares to get my position started. It says 5-year buy, but short term, like a month, it's going to come down. Okay, that's good because I haven't really built my position yet. So for ASML, the idea would be to buy more as it comes down. So 668 is where it's at. So low 600s, mid 500s would be somewhat of an ideal price point for ASML. All right, everyone. So that's going to be it for today. Congratulations to everyone on this beautiful rally that we're seeing. We'll see how long does it last for. Tesla's already starting to break down below 285. It's just not able to get back above 290. That's going to be a big resistance to watch intraday to see whether it breaks above 290 or not. S&P 500 is also up almost 2%. And Nvidia hitting a new all-time high. Pltr hitting a new all-time high. And Volatility, of course, getting crushed down over 21%. So hope you all enjoyed this live stream. Drop a like, subscribe to the channel. And again, link's going to be down below if you want to join up, of course, be a part of our MoneyVest community, get all the trade alerts, get access to the entire MoneyVest website. And we'd love to have you on board. If you have any questions, please feel free to let me know. So happy investing, and we'll see you all in the next live stream. Take care, everybody.